Maybe, we'll see. All right, testing, testing. We're here. If you're with us, it's 3:22. We are getting ready to go live with Top Trades afternoon closing bell edition. Matt Inslee here. Greg Guenthner is on the call. We got a special guest coming in soon. Stay tuned. It's going to be good. Oh, he's coming in. He's creeping. All right, we'll see you guys in about 8 minutes. If you're here early, we appreciate it. We'll see you soon. All right, everyone, we figure if you're here nice and early with us, we got at least 55 people live on YouTube. So glad that you're here early. Greg Guenthner's here. I believe he's logging in a second. And I teased it a second ago. We've got a special guest at Paradigm Press. One, we have opened up the conference room now. Here we are. Normally, I'm just sitting on that side of the table by myself.
Look at the logo. I like it.
Yeah, it's very nice. I'm joined by the one and only Alan Nuckman. So here Greg Guenthner's here. We got the technology working. Everything
is, we're ready.
This is looking good. So what did we say earlier, the green room, Gunner? Normally we're in the AM and everything we do is rational. Today we're in the PM. Who knows what's going to happen? This could turn into a happy hour. I don't even know what's happening, but we'll go live. We'll go officially live here at 3:30. But if you're joining us and you're on YouTube, go ahead, add into the comments. We can see what you're saying. We'll answer some questions. And like I said, we've got Alan here. I'll do a full introduction at 3:30. But it's good anytime that we can have other traders stopping in. Alan, he would not be shy to tell you this, but has taught me a lot that I know in the options market, as well as Greg Guenthner. So we've got a lot of firepower on the call today, and the markets are moving. They're doing all sorts of things. We're getting a little bit of tests to some of the rotation, and Gunner has a bunch of charts that he wants to share with everyone. So go ahead, add in some comments there on YouTube. We'll see what everyone's saying. As David M always says, like and subscribe. He's like first to it every time, so we always appreciate that. If you're not a subscriber to the Paradigm Profits channel, I don't know what you're doing with your life. You got to do it. We got KTM just said hi from Washington State, way out west. Gunner, while we got about 4 minutes till we go live. What are you seeing otherwise? Anything you're interested about? I guess we could talk news stories. Anything in the news before we get into the charts?
Well, yeah, Powell spoke
about
almost 2 hours ago and caused a little bit of intraday turbulence. Not much of anything really. I was curious, Alan, did you watch him at all? Have you gone over this or?
No. I just look at what the markets tell me, and let's go. It was 70% for September, but now what? Now where are we at? That's what I want to look at. See what the markets.
Where are we at for a cut? Because he kind of, from what I was reading, and I didn't watch it live, but from what I was reading, he talked about the lack of additional progress on inflation and that they're willing to basically keep policy where it's at. So kind of hinting at maybe no cuts this year. Where are we at as far as Fed funds?
Well, September still says 70%, so they've shifted it out from July to September. But what's important, I think, is there's the mantra has been, some people have been calling it higher for longer, okay? But that's incorrect. That's 100% incorrect. This is here for longer. We're not going higher,
right?
Unless the economy gets so strong, but we're here for longer. There's a big difference, between here for longer and higher for longer.
Yeah.
And I know that some people have their own bias, and to say that it's a very important distinction with a difference.
If you're joining us and you're just tuning in, it's 3:28. We're going to go officially live with Top Trades in 2 minutes. You will see we've got a special guest. We have Greg Guenthner here. Obviously, we're ready for Top Trades, but we're joined by Alan Nuckman. He's another one of our powerhouse traders here at Paradigm Press. So anytime we can open up the doors and get more thoughts on trades and options trades in particular and where the markets are headed and what we like, we're going to do it. So we'll get started here in about a minute with everything going live. But we got Jay Powell making comments. We've got the markets reacting. A lot of action going on. And I might as well read some comments. We got a hello from NC from Roberto. We got hi from Highland, Utah from Dennis. Sam is in beautiful Port Charlotte, Florida. That does sound nice. We do have, Baltimore's got a little bit of Florida weather here today. Tomorrow's supposed to be rainy and 65, so that's not fun. Hi from Central Texas from Norma. That's looking good. So we'll give it another minute here, and we will we'll do our normal thing. Again, we apologize for not being in the morning at 11 a.m. like we normally are, but we had some unmovable things this morning, and luckily we were able to get here while the market's still open for a half an hour, 3:30 to 4, and we'll be able to cover any sort of big trends and trades that we see shaping up. So we'll give it another minute or so and we'll get kicked off. But if you're here on YouTube, go ahead and write in the comments. Tell us where you're from. If you have any questions or if you have any tickers, appropriate tickers, none of these crazy, I guess you could do a five letter ticker, but sometimes we skip over those because they're almost like not legitimate. But you can send them in. You can talk amongst yourselves, but we do a tiny bit of censorship to make sure the charts are looking good before we pull them up. If you've got any tickers you want to cover, any of the biggies or any of the companies that you're looking at for that, normally optionality is key here. We'll go for there. So, all right, let's kick it off. We're at 3:30. If anybody joined us early, we appreciate you. We're live on YouTube. We also appreciate you being here at 3:30 in the afternoon as opposed to 11 a.m. Joined by Greg Guenthner. Greg Guenthner, let's do a quick sense check. How's everything going?
It's going well. It's going well. I mean, we have some chop today, obviously, and it feels like we're starting to get to the point where we could see a little bit of rollover, a little bit of chop, a little bit of market pullback here finally, after 5 crazy months of pushing higher. We had some expansion of the new lows on Friday, and we all saw what happened Friday with some of the reversals. And me and Alan can talk about that coming up. There's obviously some more downside action that happened on Monday, and today we're just sort of floating along here. Again, we had a little bit of intraday chop there after Powell spoke, but really not much of a reaction. And it looks like we're going to close pretty much close to break even right here.
We'll see. We'll all be here together for the close so we can watch it. So I would be remiss if I didn't do it. It's 3:30. We're officially starting up. Some people might not have been here early on the call. We have a special guest. So besides Gunner, the smart one, me, the talking head, we've got another smart trader. Alan Nuckman is here, one of our heavyweight traders from Paradigm Press. Alan, thanks for stopping in, man.
Thank you. So we are seeing new swing lows, but we may see a higher close.
Yeah.
So that could be something. And for me as a trader, it's important is what the market doesn't do is equally as what it does do. And I mean, considering on Sunday night, Sunday night, 5 o'clock, I was kind of antsy looking to see what the futures were doing. And the futures opened up unchanged higher, and crude was lower, and gold was unchanged. So this market momentum, yeah, we've had a pullback, but let's talk about we've got essentially 3 global conflicts going on, and the market's 4% from all-time forever highs.
Yeah, if you watch the news over the weekend, you would assume that crude would have opened up above 90 and everything else would have been down 2-3%. And that certainly wasn't the case. I mean, price is telling the real story here. And the real story is we might have a nothing burger on our hands as far as some sort of event-driven pullback. But at the same time, I think we are seeing a little bit of fear creep in. I don't know where it's going to take us. I mean, it could just take us sideways, but it is starting to feel like we are getting some folks that are pulling back, and we are starting to see a little bit of selling, especially in some of the frothier spots in the market. But again, every time I think that something's going to sell off, the market tells me otherwise. Every time we tend to see
We've needed a pullback. We've needed a pullback to the 200-day moving average, and we haven't quite got it. We broke below the 50 in both the Dow and the Russell. But it hasn't really happened in the NASDAQ, and it's been so long that the S&P and the NASDAQ have been above that 200-day moving average, which is just extreme. Usually it comes back to that level. And also, look at the VIX. The VIX is down a full point today. What are we at, 16 handle? I can't even read that. Is that an 18 handle? But we're way below 20,
Yeah.
Think about where we were just, last year. 20 would have been, happy time. So...
yeah, it's really amazing, like how people were talking about how so much fear had come into the market. I mean, yeah, it's more than there has been so far this year, but the VIX was back to where it was at the 1st of November.
Right.
Not exactly panic levels there, and it is coming back down. We have an 18 handle right now, like you said. So yeah, I mean, I would love for there to be some sort of a pullback here. I'd love for there to be a little bit more fear in the market too, just to reset some stuff, just to give us a chance to hop on some of these names right here, because it has felt like that every time I've wanted tech to pull back, especially, it just hasn't pulled back for anything.
Right, because for us, it's all about risk reward, and the risk reward has not been here for a while, and that's why I've been talking up in the big way. The commodity stocks, which had better risk reward, the energy stocks, which had better risk reward, and the Chinese stocks, which, we can get into politics, but all of the Chinese stocks have had amazing risk reward, and they are set up for some good things.
Why don't we, let's do disclaimers real quick. Obviously, we're going to be covering investing on the call, so anything that we cover, you should know that investing has risk, and anything that we cover should not be considered personalized investment advice. Gunnar, you want to go ahead and bring up some charts here? Show us what you like. We can talk over it. We've got a bunch of tickers coming in from YouTube. If you're on YouTube, go ahead, write in the comments, give us a like, all the good stuff. But if you've got anything to say or have any questions about tickers, go ahead and send it in there. I'm watching it live here on our feed. So let's do it.
All right. Close your eyes. This is the horrific crash we're going to see right now. Oh no! Look at this thing. So yeah, I mean, like Alan was saying, like I was saying, yes, momentum has obviously slowed down in the market, and the NASDAQ 100 is back to where it was back in mid-February right here. But at the same time, there's been no damage done here. really. And the same thing goes for the S&P. If we go over to the S&P right here, it's been moving down, since the start of the month right here, but this is normal. And I think what we have to realize is everyone's minds are programmed right now that stocks only go straight up. We have not had a legitimate pullback, and we need a normal pullback, 5%, 7%, 8%. That's not going to kill this market in any way, shape, or form. Those type of pullbacks are normal. However, after such a big ramp like this, people are going to be yelling fire. They're going to be going crazy because they're just not used to it due to recency bias of the market going down. And I think we're starting to see a little bit of the beginnings of the chirping of that, especially with some of the sentiment stuff online. I don't know if you look at I think it's kind of silly, but the fear and greed index that they put out, that switched to fear for the first time and I think since October, back on Monday afternoon. So these little bits of the news that we're pulling up is starting to point toward there being a little bit of fear creeping into this market. And again, I think that's a good thing. I think we do need a reset. I would love to see some of these trends just set back up again, give us better entry points. Because like Alan was saying, even looking at things like Chinese stocks, you might look at a chart of China and say oh my God, this thing looks terrible. But the reality is you're getting a good buy point off of these. You're getting a good point where you can buy into something like this, and when you're going to be wrong almost immediately. And that's part of thinking like a trader, and that's something Alan talks about a lot too, is getting those good entry points and knowing where the risk reward levels are going to be. I'd much rather take my chances on something like this than try to reach up and grab some semiconductor that's nowhere near any type of tradable level where you're going to know when you're wrong, or where you could get whipsawed out of the trade and take a big loss when you don't need to.
Yeah. What do you want to cover some of the sectors that we've been looking at that you guys, both of you have been, they've been hot over the last few weeks, in the metals, in energy, some of those rotation plays, you want to hit those up, or is there a better chart to look at here, Gunnar, for the big picture?
Well, I think we need to look at some of those. I mean, because we've said, a lot of this stuff is pulled back pretty dramatically. If you look at XLE, we were talking about this big breakout that we had seen in the energy sector right here, and it's pulling back pretty sharply right here. I'm still okay with this right now. Yeah, it looks pretty ugly in the short term, but at the same point, this thing was getting way overbought, a little bit out of control up here at these levels. This is still a viable breakout as far as I'm concerned. Even if it gets down here and retests the 93 level, that's really not that big a deal. I don't mind a springboard off of those points right there. I still think energy looks good here. I'm not ready to just put my hands up and say okay, all these moves in precious metals and energy and all these other commodity centric trades, it's all over. I don't think that's the case at all. We talked about how these pullbacks can shape up, and we've talked about that for several weeks when we were talking about how the market might move heading into the spring. You can have these situations where the red hot stuff, like the semis, like the Mag 7 stocks that are still going up, you can have a situation where those names start to drop and these other emerging trends really take over and start to zoom higher. Or you can have a situation like we got this time around where just everything was down. We had a big down day on Friday, a big reversal day in some of these names. Alan, you were talking about the reversal candle with me earlier in gold miners. And, we had these big, huge overshoots right here, and then it retreating back into its range. Gold has obviously spiked again right here. Silver is getting a little volatile right here, but you can see how a lot of sellers just sort of came in and it just got too hot. And that's perfectly fine, because I feel like we're just getting started with some of these breakouts, some of these trends right here. And, this move above 26, that was a huge move. And we're all the way almost tagging $30 on Friday. Of course it needs a break. I mean,
I love silver. And let me just say that, as a trader, you want to sell too soon. If you leave money on the table, that's the fact of life. You're not going to sell the high, but you want to sell too soon. Sell into strength has always been my mantra. And that Friday was just amazing in crude and in silver and in gold. The way that those sectors all blew off like that was the time to sell. Let it all sort itself out, because there was, it seemed like a little bit of euphoria. And I love silver in the long run. You and I were talking just a minute ago about, if you adjust the all-time high in silver for inflation, it hit $49 back in 2011, I think. If you adjust it for inflation, it's got to hit $69. So we're not even halfway there whereas gold is at its all-time highs. Now, if you adjust the 1980 highs for inflation and gold, you got to get to $2,700. So technically, we are not quite there yet, but that's our first objective in gold. But silver to me has a lot more opportunity than gold based on the price.
Yeah, I agree completely. I think the catch-up trade is definitely silver because I mean no one wanted it because we weren't in the right environment. But I think we're getting.
Can you buy it at Costco?
What's that?
Can you buy it at Costco? Because everybody's buying gold at Costco. Why not buy silver?
Yeah, you can. It runs out. It sells out.
Yeah, but you don't realize how much you would have to carry around with you? That big old bar, dude. Yeah, that's a lot of silver.
I think they do offer silver now. I was just reading it, but it's selling out just like gold is, and I haven't been able to get any. They don't have it in stock when I go, but I'll be on the lookout for it. But I mean, we're also
just like the chickens. Those chickens are never there.
Yeah.
Those chickens, that's the best value. You take a chicken home, you can make chicken soup out of it, you can make chicken salad. That chicken, no matter, every time you go to Costco, I'm not going to go off on a tangent, but every time you go to Costco, you've got to get the chicken.
If anyone doesn't know, Alan Nuckman is he's a chicken man. Like he actually produces a sellable chicken too called chicken ribs. So
all right,
if anyone, the comments are still open here on YouTube. You can go ahead if you know anything about chicken, you can write that in. Right, but I'll agree. Sometimes you go to Costco and those $6.99, $5.99 chickens, they're hardly ever in stock.
Okay, so let's go back to crude oil. Crude oil on Friday did the same thing. And if you look at the XLE, had a blow off, and the XLE was the last indicator. We had the NASDAQ make a bottom way back when, then we had the S&P, then we had the Dow, then we had the Russell, then we had the energy stocks all come back and make new highs. Now, that's new yearly highs, but if you look at XLE in a historical standpoint, it's got a long, crude oil's got a long ways to go. We're not even at $90. The technical target is about 105 because we've been between 65 and 85 for a year. So the technical target's 105, but that's like half of the 2008 high.
Do you want to pull up XOM?
We don't need to
Oxy. Pull up Oxy. Look at that.
Well, I think Gunner's got a trade on for XOM or whatever. Yeah, all of them are moving.
Right, but look at that Friday action.
Yeah, big reversal right here. You can see the upper shadow right here. I mean, tagging 71 and then coming back down and then 3 big down days. It is picking up way off the lows today, which is nice to see. But it's definitely a hard reset for sure. And we're seeing it across the industry. I mean, you saw the XLE chart right there, and the same thing with XOM. It's the exact same look right here.
Yeah. Look at SLB too. SLB, they're all the same.
Yeah, they're all the same right here. And I still like this trade.
Yeah.
I'm not going to bail on something like this just over a few bad days right here, unless we really start digging deeper into this hole. But the fact that it's off the lows and the fact that it took a reset there on that reversal day, I'm not super concerned about it just yet. I feel like we're hitting one of those bumps in the road with the market right now where people are reassessing. We have all this stuff happening in the Middle East and all that. It all seems to be blowing over at the moment. So again, I'd be much more concerned about a larger reset in the tech sector than a larger reset in the commodity centric plays.
Profit taking pullback is what it is until proven otherwise.
Yeah. And they got to come in and shake the branches. That's just how it goes. I mean, you can't be going straight up forever. That's just not how the market works. And you just have to be aware and ready for situations like this to happen. I think that there are some stocks though that are still looking kind of sick, and we're staring at a couple of them right here on the sidebar right here.
No, don't say it. Don't say it.
Oh, it looks ugly.
I'm not in the mood for you guys. It's about risk reward. This is about risk reward.
I'm not trying to talk bad about any trades.
Are you okay? Listen, you guys have to decide. Are you a seller of Apple right now? Are you a seller of Apple right now?
For what's the time frame?
A year.
1 year?
A year?
No, we're gonna get a cut within a year, and then Apple's gonna go up.
No, because the answer is no.
3 months.
So the answer is no. You're a buyer.
So
if you're not a seller, you're a buyer, then, right?
No, over the next 3 months, I bet Gunner's about a buyer of puts right now. Not but you would like to.
I want to see it break below the Thursday lows first. I want to see it actually break below, because right here it could bounce. I mean, it could very easily bounce. This is obviously going back to those October lows. This is an important area right here. I think it was pretty weak that it it shot off of those lows right there with that big. I mean, that was its biggest day in like 2 years or something. That
Yeah.
it was up almost 5%, and then it rolls over, into the weekend. So, and yesterday everything else was up, was getting hit, and it was down 2%, and then today it's down 1.75%. Why is it not getting up off the mat today? What's going on with Apple? I don't know. I mean, I feel like, and again, this is all, we're talking different time frames, obviously. Alan's talking longer term. But for a shorter term play, I'm looking for it to break down lower here. And then I feel like we get some additional downside action. And then we have Tesla too, which has looked terrible all year. Tesla's down what? Almost 40% year to date. And it's breaking down again. Look, it's breaking down into the volume bars.
All right, but how close is it to that low?
Right
Are we
here.
gonna test that low or no? Yeah,
Yeah, this one right here. Yeah, so it's not there yet, but it's getting close. That's 152, 153.
Right, 152. So do we test or reject 152? That's going to tell us a lot. And that's the way you and I both look at this, Greg, is we both look at how the price reacts. It's not about what we think, okay? It's how, for me, it's the price tells me everything.
Yeah, definitely. And the whole thing with everybody making a big deal off of the layoffs recently too. Maybe get that news out of the way and see how it reacts. Because sometimes layoffs can be bullish. Obviously, the layoffs yesterday that hit the wire were bearish for Tesla. It was down almost 6%, but it's gapping lower. It gapped lower today, down almost 3%. But it's right down here. Again, it's teetering. So we'll see what it can do. Definitely an out of favor stock, and out of all of the big tech stocks, this definitely looks the worst and has been for some time. Growth stuff isn't looking too great either. Looking at our ARC proxy right here, we can see how it's been trying, and it was playing peekaboo with this $50 area for weeks and weeks and weeks going back to February, and it's finally rolling over a little bit here, and it's below those swing lows on February 1st. Again, not something that I really trade. I just sort of look at it just to get a general idea of what's going on with the growthier tech names right here. And it still seems like I don't know which way it's going to go. It just seems like a choppy mess as of right now. So we'll see how that one plays out. But
we're coming back to support again, and Matt could tell the story about how one of our colleagues went up to, what's her name?
Kathy Wood
at our convention.
Yeah, what, in Vegas?
In Vegas.
Yeah, we're in Vegas. It was not 2023, it was 2022. Like Kathy Wood was just hanging out there and he got a picture with her. I guess you're not gonna if you're at a bar and Kathy Wood's there, you're not gonna not get a picture.
Because I yelled her name. I yelled her name as loud as I could, and she turned around, and so therefore we got pictures.
I'll let everyone know if it sounds like Alan is coming in loud and clear. He's got like a 67-ounce big gulp.
Iced tea. It's just iced tea.
But it's heavy. It's like a backpack of drink that he's drinking out of. So there's a lot of caffeine flow.
Caffeine's good for you. All right.
That's cheating, 'cause I don't do caffeine after noon. I'm just drinking water. So how am I supposed to keep up with that?
The S&P just turned negative. So let's see if we can get that lower, that new low, new swing low, and a higher close. Well, it's going to be tricky going to the close.
Patrick C wrote in, I mean, Tesla's also got earnings on the 23rd.
Yeah.
So that's another thing. We were talking about that yesterday. Like that's that again. And Gunnar, I love the way that you think about this, Alan. I don't know how you think about it, but on earnings, I mean, we're talking. This is just kind of gambling. You just kind of guess, and then one way or the other.
It's binary.
But for
that's the problem as a trader. It's a binary thing. There's no probability. It's just straight up binary.
Yeah. As an armchair watcher, though, that isn't interesting to watch because like you've had such pressure in EVs. They could come out and just sort of shit the bed on actual earnings and the stock goes down, or somehow they do some sort of little Hail Mary and they're like, we're not a car company. We have this other thing, and they start pointing to some other thing and the stock goes up, So
yeah.
it is a gamble.
Right. And
earnings are always
tough.
Earnings are always tough, and I think they're even tougher for a cult stock like Tesla, because it's always setting up for some sort of big reaction one way or the other, and it's impossible to predict. I mean, you can give me the numbers ahead of time and I would have no idea how the stock is going to react.
If we even knew what the exact numbers of the earnings were going to be, the revenues and the sales, we still wouldn't know which way the stock's going to move. And that's what this all comes down to. The rest is noise. We have to know it's not what's going to drive the stock, it's how the stock is going to move is our eternal question. And that's what we try and solve.
Yep. Yeah, you gotta, after you bring up SMH, you gotta bring up SMCI. It's crazy. This is crazy talk.
SMCI, what's SMCI doing? Is it up big today?
Oh, just enjoy it for yourself.
All right. Well, so this is another situation that we've been talking about a lot lately, and there have been some big reversal days in semiconductors going all the way back to March, and yet very little downside action. There's plenty of buyers willing to step in and grab these stocks right here. And even today, after a couple down days in a row, I would have thought that the way the market was behaving on Friday and Monday, that these stocks would be down a lot more, and they weren't. So again, there's still a lot of buying happening under the surface here, and a lot of people propping up these stocks. And it goes back to what Alan is saying right there. Like, the price is telling us everything here. We can come up with whatever narrative we want to, but I mean, these stocks are not breaking down like I would think they might be doing. And I feel like that's important information here. And I'm going to pull up SMCI since Matt told me to. Yeah, look at that thing. And I saw my ghost up here.
You gotta make the ghost bigger, stretch him out.
Stretch him out. Yeah,
Let's make him bigger, dude. He's just getting spookier.
What's that What's the ghost?
Alan, there's a lot of things that we can teach you as traders. One is my favorite thing in TradingView. This is TradingView. I got this software too. You can put emojis on charts.
Oh,
it's a whole new. It's
okay, now that changes everything.
Yeah.
That changed now that I know. I've been doing this for 35 years. I didn't know you could put a ghost on a chart.
Yeah. It
all
right.
Well,
it makes it way better.
That's a better indicator. Oh, yeah, there's a unicorn. There you go. That's now I can see.
But super micro, like this is I cannot believe what is happening here with this thing. Again, how is it this resilient that it's up 9% today?
It's unflappable.
11. It's up 11.
We're gonna be building houses for
that's quite a pattern too. If you draw a line across those lower highs.
Yep.
You break above that, and then it's you will see that unicorn.
It's
I mean, if this closes up here near its highs, it feels like we're heading toward a pretty substantial breakout here after consolidating for what the past.
That's a flag, and then that pole. I mean, that's a lot.
I mean, what are we going to 2K? Like, where's this thing headed? It's absolutely insane.
Okay, let me ask a serious question though. Well, when some of these companies split, like who split what 5-for-1? Didn't Chipotle?
They did 50.
Okay, so what about these guys? Why don't they at some point they just should?
Yeah, you got to give them a little bit of time though. I mean, this was a $280 stock just a few months ago. It doesn't even feel how $1,000 feels yet.
They're probably running to sell shares first. They're like, hey, we gotta do some offerings here.
Let's dilute this a little.
Let's dilute this thing before we do the 50
yeah,
for
I'm actually surprised they haven't. I mean, why wouldn't you at this point and raise a bunch of money? But I mean, it's again, the strength of these is incredible. And I think Nvidia is up too today. I saw it on the heat map earlier.
Momentum means more money. Money, momentum.
Yeah. But I mean,
scary.
It's pretty darn incredible that there wasn't a little bit more of a shakeout. This was the pre-earnings one right here that we were talking about that one time. Like, oh, everybody's taking profits before earnings, and then it gaps higher and is up double digits that day and doesn't look back until what?
Yeah. All right, can I tell? Let me tell an old man story. Was that me?
Yeah, that's you. Speaking of old man stories, this man can't mute his phone. If you've been at home and you hear these little beeps and you think it's your phone, it's not you. It's Alan's phone. So, Alan, where are you from in the Upper Peninsula? We got chit chat going on.
I am from Marquette, which is the only major city in the Upper Peninsula. 300,000 people in we call it God's country. All right. So, and Dave Gonagaman, he lives up there too. Yeah. The old man story I was going to tell you is this. It's about Qualcomm. Qualcomm went from like $20 to, I don't remember. It felt like $500 back in the, I don't know, what was it, 2000s? And it was the NVIDIA of its time. And then eventually it just died for no reason. And so, got to understand, momentum was a powerful force, but it doesn't last forever. So at some point, just learn to take profits. Yeah, look at that move. So just learn to take profits. This is not about one. This is not gambling. Trading is not gambling. Trading is identify execute, manage with proper money management, and then maximize the trend and then repeat it. So you want to be able to do this over and over. It's not about finding one lucky stock and just doing it one time.
Yeah.
You know, it's about doing it over and over again with consistency. And that's the difference between a trader and a gambler.
I assume this is split adjusted, but the breakout here was at 450-ish, and it ran all the way
So it's
to
split adjusted, but
89.
it went crazy. It went from like 20 to 500, and then people lost their effing minds.
Yeah, and then it bled off. It happened.
So, you know, I lived that story. So I had a customer, I was a broker at one time.
Like, should have held it.
And I had a customer that was up $1 million, didn't want to sell. I'm like, listen, you got to do something, buy some puts. He's like, no, I'm not going to buy some puts. It's going higher. And because analyst had said it's going to $1,000. And so he's like, I'm waiting for it to go to $1,000. I said, well, just buy some puts. He's like, no. And I said, okay, sell some calls and buy puts if you don't want to spend the money. And he's like, no, I'm not going to do that. So anyways, the market turns over and, you know, he ends up making $100,000 instead of $1 million. And so he asked me to send it to his church as a donation. So it wasn't really his money. He didn't really care anyways. But the point is, he was up $1 million and let it go.
All right, if we want to, let's get into the comments here. Again, this is hypothetical. We're in La La Land. Gunnar, if you could go back to the SMCI chart. If you guys had to do a play on SMCI, which way are you going on it? And what would you be thinking for a play on this? Again, this is this is not an official,
right.
Probably not a stock we would touch with a 10-foot pole, which is too crazy. But if you had to, what are you doing? Alan,
I mean,
would you go upside on this? Yeah, Gunnar, what do you got?
Yeah, you go upside. You absolutely go upside on it. I mean, it's about to break out of this flag, you know, and I would think that, like, assuming that it wasn't like a crazy expensive play, that you would try to capture some sort of upside, at least up back to the previous highs right here, depending upon whatever your time frame is. But yeah, I mean, it does feel like this is starting to break out right here, and I think the fact that it's doing it on a day like today, after what we've just seen happen in the markets, gives even more credence to the upside trade here. I mean, I think it would be silly to try to short this right here.
Upside definitely, but I don't know how to play it because I'm an options guy. And so I'm not going to do anything with the stock. There's not much you could do. I mean, there's fractional shares that you're going to trade because you're not going to buy 100 shares of this stock. So I really don't even know.
But yeah, my bias is definitely to the upside. I mean, you just can't deny the strength of this, and it does appear like it's trying to break out right here. And I think that if it opens higher and moves higher tomorrow, that pretty much confirms that that in the short term, that's the direction it's headed.
Yeah, but again, you get into the calls on this thing. If you're trying to play a month out, you're going to probably get into pricing where it's just
who's their best competitor?
Prohibitively.
Who's their most comparable? Okay, well, that's not a good comparable. Who's the next best comparable?
Some other crazy semi stock.
Okay, Taiwan semi. I don't know. What other semi? How about the stocks? Can we just trade the stocks?
I think they wanted that. This is just such a darling stock. Like SMCI is like
so
people are interested in.
Maybe we're not going to get all the SMCI, but we won't have the individual stock risk if we trade an index that has that stock in it. So the risk reward is less.
Like it looks just like NVIDIA. It's the same chart.
Okay, so but I mean, okay, well I guess we can't trade that. It's not better to trade the semiconductor index either.
Same chart.
All right, same chart.
All right, well we can switch gears. Why not? Go ahead.
Alan, tell me about the halving.
I am not the Bitcoin expert, but what I did see today, because I like to be current to have conversations with these kids, you know, these young traders, is that the GB, what was the first ETF that did Bitcoin?
Oh,
GBTC.
Right. They lost half of their money. Speaking of halving, they lost half their money because they charge a 1% management fee. And the other ones charge like a 0.1%.
Right. So
we're talking about Bitcoin here. How absurd is that? When you're trading Bitcoin, are you worried about the difference between 1% and 0.2% or whatever? Like that's going to be your deal breaker. You're not going to trade the ETF. I think that's a little ridiculous. But they're saying the other ETFs have gotten all of their money because the management fees for that first one were so much.
But that's the narrative. That's how narratives work. If you get 7 Bitcoin ETFs that are out there, you're only going to invest in one and you want to find the best one. I use BITO because it's optionable. So it's like there's different reasons why you want. I heard FBTC is a pretty decent one. You know, it's like they have all these little narratives. Like that's the thing. And all of a sudden you get enough people in the narrative, they're like, oh, I don't like that one. It's got high fees. And then they tell their friends.
Fees, 1% now is a high fee? Well, that's great. That shows us capitalism. First of all, there's no commission, so you can't complain about that. Now you're gonna now a 1% fee, you know.
There's still some commission. We'll see. I don't know. On the call, they're buying there's commission. Yeah. So Gunnar, what are you seeing here on Bitcoin? Because this is, I mean, it's a we got so many things happening.
I haven't touched the chart since last week when we were talking about it, and you can see here how it was coiling, and now, well, you know, it had to come down here and retest these lows from March right here. And now we're in the chop zone right here, heading into the halving. Which do we have a Matt? You're the Bitcoin expert on the call.
I got you.
Whether you like it or not, do we have a better date for the halving now that we're getting close? Because we're within like 3 or 4 days of it now, right?
2 days, 22 hours, and 57 minutes. It's looking like April 19th at. This is looking like the afternoon.
Why is it an arbitrary time like that? Is that what Satoshi?
It has to do with so Bitcoin
in the
mining.
eclipse.
No, they mine by blocks. You get all these little miners, and they mine a block. It's when you hit the certain block.
Oh.
So if miners went crazy right now and mined like crazy,
and they got more,
it could happen would happen fast.
It happens at a certain.
So it just depends on the block happens. So it looks like it's around Friday at 2 p.m. Very interesting.
It is interesting. I figured it would happen over the weekend at some point, but it's happening a little bit earlier. So yeah, Bitcoin's back in the chop zone. It really doesn't surprise me that it backed off a little bit there. I mean, like it was coiling, and I thought we were at a point where we could see another like crazy Bitcoin weekend, like we tend to do, where you wake up, you know, on a Sunday morning and overnight Bitcoin has shot up 10 grand. It happens. It loves to trade crazy on the weekends, but it doesn't surprise me that they let the air out of this a little bit because, you know, there's so much hype built into all this halving stuff. And it seemed like such a foregone conclusion that, of course, it has to move in the opposite direction because why not? So it's down here now. I mean, that's a pretty substantial drop, but like really nothing in the grand scheme of things for Bitcoin. It went from what 71 all the way down to like 62, the high 62.
Yeah. Can you pull out like a 3 or 4 year chart? Because again, you can see it in relation to
where it's been, where it was.
Yeah. Where.
Go back further.
Well, yeah, further because it's got the highs that you want to see.
That's what works.
Yeah.
Look at that.
So we have these highs back here, and it's just consolidating near those highs. There's nothing bearish happening, you know, on the longer term. I think this is just more Bitcoin noise.
So it went from 70 to 20. That's $50,000. Now it's made new highs. You put that 50,000 on top. So Bitcoin 120 is really the V recovery target on this. So
yeah, and I don't think and that number would have sounded crazy, like, you know, back in early 2023, but now that seems like completely reasonable. Like, so yeah, I mean, I don't.
We had many meetings where no one wanted to talk about Bitcoin, and we as traders talked about that's when you want to be looking at it.
Yeah, definitely. And it does, like, and Matt, weren't you telling me this about the history of halvings and how it does tend to move like higher after halvings?
Yeah, it's after. So again, a lot of people think you like buy it and then sell the news because that's what happened with the ETF. The ETF was buying before and then sell the news and it dumped off. But in the last 3 halvings, it's been the next like 6 to 9 months that it's just gone ballistic. And everyone's saying, I mean, James Altucher too, and a lot of people are saying they're calling it different things like super halving, all these different pieces, but you've got this other component that wasn't there before, which is these ETFs. These ETFs are buying, and there might actually be a limit on the amount of Bitcoins that are out there in the open market.
It's a commodity. It's a commodity. There's a shortage of coins. So it's not like there's not an infinite. You can't just go to the store like you can go to Costco and buy gold. You can't go get coins if there's no coins. S&P, is that it? Is that a closed positive or no?
But we're closed. It's 405. It looks like it closed negative.
Yeah, I think it was slightly negative.
Looks like we rolled over and closed lower on the day right there. Going back to Bitcoin real quick. I think the big question here isn't so much about Bitcoin. It's what's going to happen with these Bitcoin miners in the short term, at least like from a trading perspective. Like, what's our friend CLSK going to do here? which seems to have trouble getting traction. Is the narrative correct about these stocks having a hard time with their mining practices after we have the halving? I don't know if it's true. I mean, the market will tell us whether it's true or not, but it does seem to be losing a lot of steam here. I don't see a lot of updates. I see one update here going back all the way to March 25th. So that's not great. I'll be very interested to see how this resolves, because I think.
All right, look at that gap down below. That's interesting. Number one. And number two is implied volatility is 125%. Yeah. So if you want to buy this stock lower, sell a cash secured put on this as a way to get into it. Look, what can you get for selling an 11 put right now? Or let's say a 12 put. 12 is that super support. You sell a 12 put, you probably get $1. That means that you'll be long from 11 if you get a put to you. If you don't, you get paid.
That's a free trade from Alan, giving away free trades right here. Put that one down, Matt.
I don't even know what the premium is. Let me look it up.
I've been burned too many times with things
not,
like that. The reason the implied volatility is that high, you can look at it different ways. You can say, oh, implied volatility is so high, I'm going to get that premium. Or implied volatility is that high because
all right,
it could get volatile.
Right, but
then all of a sudden you're holding the stock.
Let me just say this right now. You look at that chart, you say, listen, I would like to buy when it gets to 11, right?
I'd like to buy when it gets to 380.
If you and I look at this chart and say,
when do I want Mara? Gunnar, guess when I want Mara? No, in between $5 and $7.50.
Okay, no.
It's ludicrous, but that's when I want it.
Okay, we'll come back to this one too.
Yeah, look, there it is. That's what I want.
It's very much the same thing, but go back to the other one. I want to teach a life lesson to my friend Matt here. Because I've taught this to Matt before.
It's happy hour, by the way. It's 4 o'clock.
Okay, so look, if you look at that chart, you say, listen, I would love to buy. I'm going to put a limit order. I want to buy at 11. When it gets down to 11, I want to buy the shit out of this stock, right? Got this limit order working, nothing happening, and the market doesn't come down there. So you could sell a 12 put for $1, meaning your basis cost would be 11. You have the money in your account to buy at 11. You want to buy at 11, Matt. You're not listening. You want to buy at 11. Okay? So you sell the May, you sell the May 12 for $1, you will get in at 11 if it goes down. If you don't, you get paid $1. And expiration is 31 days from now for the May option. So it's a win-win situation. Either you get in at a discount, you get in at 11 and the stock's trading at 14, which is, I'm not good with math, but that's a pretty healthy discount, or you get paid not to. So it's a win-win situation. And then if you get in at 11, then you could sell a covered call against it and wheel this thing. Because of that high volatility. Okay, what was the other one that you looked at? Momentum? What was it? Marathon, that's it. Same kind of thing. What's the
Again, implied volatility is going to be off the charts on these things.
Implied volatility is 100, so it's not as much as the other one, but it's still
really not bad for Mara.
That's still. Look at that chart.
Yeah.
There's that gap right below here.
These things are just, again, they're going to be a little bit less traded than before, but they're just.
Well, my whole thing
leverage on leverage, man.
See, I'm
on leverage. It's like to triple because I'm doing options on these things.
Yeah, my main thing is is price going to confirm this narrative that's going around that these stocks aren't going to be that great after the halving? If that's the case, then they're going to continue to go lower. But if they start bouncing, and I think it's going to prove that narrative wrong. So I'm kind of just interested to see, at these levels, what's going to happen here. This obviously, and Matt and I talked about this before, this isn't my preferred trading vehicle anymore. CLSK definitely is. This is
okay. Well, you have to tie it to old school. How much of a connection between Bitcoin and gold do you think there is?
Bitcoin and gold?
Yeah, I think it depends.
Oh my gosh, this is
mentally and psychologically, what is the connection?
There's too many answers to that question.
But that's the question I'm asking, because gold continues to make new all-time highs. Yes, we had that blow off on Friday, a little bit of profit taking. We're off in Bitcoin, but they've been rather similar in the last 6 months.
Yeah. And I know wants to hear it. I think what you've got here, and this is my latest spit out, because there's so many answers to that, right? Gold is the legitimate inflation trade, and you're seeing actual big smart money heading to it, as opposed to Bitcoin is the fast moving retail inflation trade. Not to mention sort of tech stock, momentum stock, where you like whatever. Like that's the difference. So it's like
So it's almost smart money versus dumb money, but dumb money
can go way higher.
Dumb money's made a lot of money that I haven't made trading Bitcoin, and I'm smart money. So
Old money versus young money too.
Yeah. That's true. You're not going to get, again, I mean, if we think 20 years, 50 years in the future and digital currencies are a real thing, which I can't see how that's not the case, people, they're going to be way more interested in what you bought Bitcoin or Ethereum or whatever at compared to what gold is doing, potentially, right? You just have a different, it's a changing of the guard. Now, again, gold, I hear the gold bugs. I'm a gold bug. I like it. You're going to hear the 5,000 year people. They're going to be like, well, it's been a currency for, that's fine. But right now, a digital currency is going to have some momentum behind it because people want it.
All right, speaking of currencies, I've been waiting for you, and you haven't brought this up, and I'm going to have to force you to do it. Pull up the dollar chart. We're at 106.
All right.
106 is the halfway point between the 112 high and the 100 low. Everybody has lost their mind on CNBC about the rate getting, what are we at, 4.6 in the 10-year and like 4.97 in the 2-year note?
Dude,
Okay.
This thing, the dollar could just ramp. We were talking about that the other day, Gunnar.
Okay. We can say that, but now pull out a 20-year chart and see what it tells you, my friend. People have lost their minds about the dollar. Look at that. Well, no. You missed it. Go the
You
other
said
way.
20 year.
Go, okay, you know what I'm saying.
Play it as it lies.
30-year. Okay, I meant 30-year. 30-year. Let's go the other way.
Go 30? There.
See, look at that. Look at that high. That's a high, my friend.
That's Reagan's America.
That's that's a high. And if you pull up the yield of the 10-year note at that time, yeah, you people are spoiled by what's happened in the last 5 years. Absolutely, completely spoiled about what yields are and what the dollar is in the last 5 years.
Dude, I'm telling you,
Lost their minds.
Just imagine
Lost
the
your mind.
ECB cuts rates
Oh.
in a month or two, which
And
they're
we don't-
expected to do. They're supposed to cut in June, and we don't.
And we don't. Yeah.
The dollar is going towards 120.
First of all, I have a bet with Sean, and I'm gonna have to buy him dinner.
Sean Ring.
If we get closer, we're getting actually pretty close to where I have to buy him dinner, but you know.
I think this rally is a little bit overdone in the dollar, and it's going to pull back.
Yes.
But what's more interesting to me, and I get what you're saying, Alan, but what's more interesting to me is the fact that gold has been so steady and moving higher.
Yes.
As the dollar is ripped higher here. I think it says more about the gold breakout than it does about the dollar.
Right.
So
That's my point.
Oh, I agree. We're
That's
all
my
the same.
point.
Let's put our hands
commodities-
together. We agree on that one.
The commodities have rallied in the face of dollar not going down. I'm not going to say strength, but I'm going to say not going down.
yeah.
All right.
Just wait till the dollar goes down, then all of those commodities and resource stocks are just going to go bonkers in a good way if you like both.
Yeah. And we talked about it again. It has to do with the fact you would say, why is something that historically is inversely related, the dollar and gold, why are they both going up? It's because the dollar index is going up because it's indexed and we've got other currencies to play. And gold is going up because it's actually an inflation hedge. So it doesn't care the price of the dollar. It's just going up because people are trying to get out of dollars in general. When they're getting out of dollars, they're buying gold, it's going up. Happening, buddy.
I don't know about
Yeah.
I do like
I don't know about
Gary
that.
wrote in the comments, he said you need to have all three, Bitcoin, gold, and silver.
Okay, that makes sense. I'm not going to argue with that. I'm not going to argue.
They just need to start selling Bitcoin at Costco now. If you could pick up chicken, Bitcoin, gold, and silver at Costco, you're set. You don't have to go.
Listen, I was at Quick Trip, which is a version of 7-Eleven in the Midwest. They have a Bitcoin cash machine next to every cash machine.
Yeah,
So I don't know what that does. You get like a cash card, Bitcoin card. I don't know how it works.
Yeah, you put in your money that you can get stuff for, and then you get a gambling ticket that's called Bitcoin. I don't
Well-
understand that at all. Could you imagine if you go to that? Why would those Bitcoin ATMs ever exist? Someone write in the comments why the hell those exist. They make any sense.
I think it's just purely for marketing purposes.
Okay, what
Yeah,
about
it's just
this?
marketing.
What about this? We've always talked about what's the word we've talked about? Destruction and friction, or the buzz phrases or whatever they're called. But if you eliminate, like Bitcoin could eliminate, so we could, if we did everything digitally,
Yeah.
we could eliminate Visa and the 3-4% fees that go on every sort of Visa and MasterCard forever.
Yeah.
So that's it. It's just, there's no friction. It's just a straight ass transaction. That's how the world should work.
I like it.
You would think,
Yeah, I mean, then the middleman doesn't get his cut.
right?
Dude, the death of the middleman is coming. That's an article that I've got.
Oh, listen,
We talked about it.
I am the middleman. I used to trade on the trading floor. I used to be the middleman, and the middleman is dead. Okay, there's no traders on the floor. It doesn't work like that anymore. The spreads are so tight. Like I'm going to tell a story here. At the CBOE, they reopened the trading floor because they want to be able to do some of the more complicated strategies that have like 4 or 5 legs or whatever. So it's more efficient to do it with people than it is to do on the computer. And it's a good showcase for the exchange. Anyways, I've got friends down there that when they see a trade come by, that if they put the trade on, the spread is too tight, that they would actually lose money by doing the trade because of the spreads are so tight. And that's the customer now. Everybody has, the equal, there's no barrier to entry anymore. And everyone has equal access to the markets at any time. The spreads are tight. There's no commissions. So this is the greatest time in history. There's more opportunities now, up, down, sideways than there's ever been before in history. So
Yeah.
This is a good time.
Steve-O had a good comment. He said, man, you three should sit down and talk with your colleague, James Altucher. This is true. James, Chris Campbell, those guys, when it comes to deep Bitcoin knowledge, it's the same thing if we said gold. Like, frankly, Byron King and Jim Rickards,
Right.
We should sit down with them too. But we're in the middle here trying to trade these things. And like Alan said earlier, and Gunnar, you've done a great job. Alan, you do it all the time. It's just the repeatable nature of being to trade in and out of this. Should you buy Bitcoin and hold it forever? I mean, yeah,
Probably.
Should you buy gold and hold it forever? Yeah, probably.
But
Should
as
you buy
far as
Apple, hold it forever?
trading,
Probably.
we're here for trading. We're here for being able to find something that we want to buy or sell, have a certain amount of risk, have a certain probability of success, and have a strategy. And that's what trading is all about, is having a plan. You have to have a plan. That is not trading. That's investing. Investing, great. Investing, you're hoping to make money, and that's your only strategy is hope. Trading, you've got a trading plan. That's the difference.
Gunnar, what other tickers do you like right now? Where do you want to go with this? Because that's the other thing on Top Trades. We like to just say, hey, these are some places like week over week. We kind of like what we're seeing here. This has been a tricky week.
I mean, yeah, I think we've gone over everything that I'm talking about. I'm kind of in wait and see mode here to see how this market bounces after this pullback right here. I was just looking at the heat map that I have up while you guys were talking, just to see like what was moving today. And we definitely had some tech snapping back over here with some banks down after earnings. I mean, we're rolling headfirst into earnings season here. So now we have to play this game of like earnings landmines when we're trading. Like, how can we avoid some of these earnings announcements and find the stuff that's not reporting, that's going to get in the way and potentially break our trends for our new trades. So, I mean, we have over the trading desk, we have an oil play, we have a gold miner, we have uranium play all on right now, and we're waiting to see where these things land and how everything settles before we decide on what we want to do next.
Yep. Alan, anything else you're seeing, I guess sort of like week over week, anything you're looking for or anything that's flashing on your screen?
Well, it was big that gold made new highs last week and closed lower. So it's important to see how we do on a weekly basis this week and kind of stabilize a little bit, I guess. And oil is interesting in itself that I want to stay above this 85 level because that's kind of the range top. So these are things I'm keeping an eye on. But as far as the S&P goes, go to the S&P, and 5180 there's a gap up above. So if you look here in the last 10 days or so, there's a big gap at 5180 that I was looking at. How come I'm not seeing it there? Stretch it out. Maybe. Yeah, it's hard. It was a price gap on the price chart that I thought I saw that it looked like the market's going to try and make an attack. And we're just at the beginning of earnings season, and the banks billions, we're still billions, and and people might have some complaints about it, but it's still there's a reason you put money in a bank because the bank's making money.
Yeah.
Yeah.
And seasonally, there's nothing crazy happening with this type of pullback move right here either.
Right.
I mean, this is the time of year where I would expect us to trip up a little bit in the markets. So, I mean, the main thing I would say is don't listen to a lot of the shriller folks in the financial media out there who might be it might be crying wolf about some sort of bigger move. I mean, a bigger move has to start somewhere, but we haven't had a pullback in so long. This feels pretty routine so far.
Yeah. The only thing I'll say personally, and again, I'm possibly a weak hand and I move a lot more than you probably should in a big portfolio or whatever, but I'm more cash now than I've been in a while. And I'm not super, I guess I'm so tentative on things. I'm not super excited about anything. So the only things that I'm holding big in my account right now, and these are just shares that I'm long on, these aren't swing trades, but it's Palantir, PLTR, and it's BITO. I'm holding BITO because I still think there's going to be this 6-month run. I think Bitcoin might get a squeeze.
There are so many charts that look exactly the same.
But Palantir, I'm not happy even holding this. I just want to hold it because I like it and I might just close my eyes for a year or two. But again, I'm not excited about it. So that might be a feeling that a lot of other people are getting in the market where they're just not excited. Like AI is worn off a little. Bitcoin is worn off a little. We were hoping for the rotation trade of the oil commodities, and they're not they're not going down. They're just like slower, So it's just the excitement is not there. So we might get a little slowdown.
That's the nature of the markets, right? I mean, we've overshot a little bit, and now we need to cool off and reassess, and I think that's what's happening. I think your thinking is right in line with what's happening in the market.
That's scary. That's true.
Trading is all about psychology.
Could we
don't think, trade what you see.
Can we pull up AGI real quick? Again, I'm talking more as like publisher Matt, personal Matt, that kind of stuff from Paradigm Press. We've got AGI, Alamos. AGI. Yeah.
What is that?
Gold miner.
Oh,
again, this stock, we've got questions on this, and I'll just give my honest answer, right? Because I love what we do at Paradigm Press. I love the independent publishing we do. We can see it on this call, right? We've got different opinions. We get passionate about stuff. Someone was asking, hey, you guys were talking about AGI on the call a week or two ago, but
same blow off on Friday.
One of the publishing groups, like I think Dan and the Rickards camp, they sold it with a modest gain, right? So it's good, but people are asking like, oh, are you not excited about it anymore? I'm still interested in looking at the miners. Like if someone wants to, in their publication, sell, they can. That's the cool part about being independent. We don't have a top-down paradigm say, like anything that we do. Like if they want to take that modest gain because they see a little chop coming or something, that's what they're going to do. But long-term, Alamos Gold was one of the best-looking gold charts out there. They've got a well-run company out of all those different miners because I've kind of poo-pooed on some of the miners. So do I like it? Yeah. But there's no company line for Paradigm Press to say everyone has to like this and everyone has to keep holding it. All the editors and all of our analysts have different mindsets and different timeframes.
It's back to that previous high back in December. It's come back to that breakout point as stocks often do. And if you look, it's got that sell-off on Friday that we talked about that happened in gold, that where it made new highs and then backed off. AU, I just took profits on Friday in 50% gain in my AU options. All right. Exact same chart. I didn't even know. What was the last one?
AGI.
I have no idea who AGI is. I've never, I trade what I see on the charts.
The other one that looks good is KGC. KGC is Kinross. Again, all those
it's the exact same chart, and I use that Friday as a profit taking based on when we get to that 50% gain.
They
all look exactly the same.
No, pull up Newmont, NEM. You want to see it? You want to see a toilet? Put that little. Just kidding.
It's not really new highs yet. It still has.
Maybe you like the toilet. I don't know. I'd rather, like, if I was in one of these, I wouldn't want to be in the one that's holding up pretty well. That one.
Okay, listen, you're going to complain with a stock that's rallied from 30 to 40, and 4 months?
Yeah.
Okay, so you're
not
compla-
exciting.
So you're a complainer.
Compared to a lot of the other miners, it doesn't look as good. Is what.
Okay, you still made 30% in 4 months. Stop crying.
Nobody's crying.
Somebody was crying, he was complaining.
Oh, I wouldn't hold that because I would pick the other shinier miners. All right, well, we're gonna wrap it up here.
GDX, stroke GDX, just for fun.
Yeah, GDX is probably,
If you don't want the individual stock, there you go. It's got the exact same pattern, and it's come back down to that 32, which was that breakout. Make a bigger chart. Was 32 really significant? Because that's a double top, and then it blasted through that.
Yeah, I mean, you can pick your spot here. I mean, but I mean, we still have these.
We
highs.
still haven't made those highs, have we?
Yeah.
All
yeah,
right.
and it makes sense that it's pausing here too, and the fact that gold, is recovering, the metal is doing fine. Like I'm just thinking this is just volatility in the miners that we're seeing because it's a new hot trade. It's coming into its own right here.
yeah.
I think someone talked about the gold miners at the last symposium.
Maybe it's hard to say. Who can remember back that far?
Yeah. A little bit too far. Yeah, I talked about
That had great risk reward and nobody liked it at that time.
we always like gold and gold. That's the problem. All right, everyone, we're gonna wrap it up here. I will say thanks to our special guest, Alan Nuckin.
Thanks, Greg, for having me and letting me interject.
No, I love it. I'm glad you came on, Alan. I appreciate it.
Yeah, so we'll see if we can do that more often. Thanks again, everybody that's in the YouTube chat. A lot of really smart comments in there, really good stuff, keeping us on point. We appreciate it. We'll see you next time. We will be back, unless there's some sort of another cataclysmic event. We'll be back at 11 a.m. next Tuesday, right in the meat of the trading day. So thanks, everyone. Thanks, Gunnar, and we'll see you all next time.
Thanks, guys.